Good day family, good day family. I'm just going to do a short teaching on how to use Monday's trading range. Um, Monday's trading range is so important. That's why I don't like trading on Monday. I like to wait for price to show me uh, how the Monday's trading range is gonna be like. So I always allow price to print the Monday's range, and I will use that range in advance for some of my setups. And this is one of the ways that I approach the markets and how I use this information to my advantage. These Monday ranges are so powerful, they act like magnets. They attract price like magnets, they attract price like gaps. So I have realized that smart money or whatever the algorithm usually use these ranges most of the time as reference points to key its buy and sell uh, moves. We're going to see how this Monday's ranges can be used as a reference point by price in the future. So as you can see here, price on this day here on a Monday, it opened, traded down, took a Friday's low, and then it expanded to the upside. We had this Monday's high and this low here. As you can see how price hit that level there, closed above it, and then came onto it, and then it expanded up. That's a good trade there. Let's say you know that your higher time frame is telling you it's bullish, and you see this kind of thing here. You know that you're going to buy here. What time is it? 3 o'clock. It's New York. We have this break in market structure and the gap there. So you can just take a buy there. That's the S&P there. It's a lot of profit that you can make from that. So price comes back into it and it goes up again, goes above it, then it expands one more time, and then it finally goes. But if you look carefully, what you see, I've annotated the high, the low, and the midpoint of the range. And if you take this midpoint and this high and you divide it again, you get this range, the upper range, and its midpoint again. What happens there? Let's say you know from your previous analysis that you are bullish on the high time frame. What do you see? Price engineered buy stops. Whenever you see price create these equal highs, always know that it's going to revisit that level one more time. And then it engineers the sell stops, these equal lows, and then it takes them out, breaks structure, comes back into the order block at the midpoint of the range high and low. When you divide it, it even went a little bit deeper into the discount of it, and it expands up, targeting that level there. And these levels, you realize that I've allowed them to expand into the future there, because price action that is going to be printed in the next coming days, weeks, months, years is going to be affected by these levels. Just know that it's going to be affected by that. I'm not going to explain much into detail what's really taking place there, but I'm just going to show you how powerful these are, and with your own understanding you can just frame your own model from that. And we have this Monday's box here. Again, same thing like here. I mark the high, the low, and the midpoint. You can see how price is just consolidating above there. Look at how it's sweeping this high, this level there. It keeps sweeping this institutional level over and over again until it's allowed to tank from that level to this level. What's stressed about that? I hope you know it. Buy stops. What's below here? Sell stops. So price got delivered nicely there. And if you look carefully again, look at how price is reacting at this level here. Price hits this level, closes below it, hits it, closes down again, and then finally it breaks structure above the level there, and then it comes back into this bullish break and order block, and it buys nicely from this level here. And then price trades all the way back, trading back inside that midpoint. Why is it rushing back into the midpoint there? If you take from that midpoint, you see that there's something there that's attracting price. You have a gap there. Price is rushing there. Then it just closes its wick there. Then we have a new wick. What's that? Buy stops on a Monday. Why did price run to that? Because there were buy stops there. It takes the buy stops there. What does it leave below here? What does it leave? Sell stops. It's eyeing for that liquidity and it leaves the sell stops. Between this low and this high here, between this area here, inside this space here, this pocket, when price is running up, in this pocket there's a build up of a lot of sell stops if they're running for the buy stops there. When immediately price hits this buy stops, when this buy stop gets hit and they are now hot, smart money switches direction, sells to those who are willing to buy at a higher price. That's why you see on these days here price all the way comes down. Why is it coming down? To take out this sell stops here into this, which are just residing inside this pocket, and they are buying from them, taking out what's resting above there. What's going to be resting above there? Buy stops. Price runs back and comes and takes them out. But you can see that high and that low, how price just traded below the equilibrium of the range, hits it and then it's sold, comes back, look at that level, above it, takes out those buy stops, and then on a Friday, he starts and then he buys. And we have another week again, same thing, it never changes. So if you look carefully, take this high here, and drag it nicely. Drag it nicely. Drag it nicely. This is a new week again. Monday, price takes out the Monday's low. What's traded above there? Price stops into this level here, into this into this equilibrium of this high and low, forms the low of the week, expands break structure, fair value gap entry, midpoint, bang, delivers nicely. You can see the equal highs there. Price forms equal lows, runs the equal lows first, and then bang. And again, we have this box here, new week. Price does what? Triggers the buy stops there, comes all the way back, triggers the sell stops, then goes all the way back, does the news for you. They can just mess up with you like that. So look at how price is respecting this level and this level here and the equilibrium of it. Nice reaction indeed. Nice reaction indeed. Price runs below it, gets delivered to this low here, and you can see how price is just playing around these levels here. Then we have a new week again. Price runs up, forms the high, forms the low. Buy stops, sell stops. Runs buy stops, runs back into the equilibrium. We have a fair value gap, rebalances there. Engineers equal loss, runs up, then takes out the equal loss at this level here, goes back up, and then eventually comes and fills up all this mess. And then we have this here, price forms this range here, closes below it, sells nicely, London there, and then closes below it here, hits it, tries to go up and it fails, sells nicely, as you can see there. Price keeps hitting that, like it's like hitting on a ceiling, a hard ceiling. It just keeps hitting it and then it keeps being rejected down. That's one of the signs that price is bearish, and as you can see there, it's respecting those levels nicely. And we have this Monday's range again. We have the equilibrium of it. Price trades up, and then it comes back. You can see on a Tuesday, price are just consolidating again. Hits the equilibrium, sells off, hits those levels, goes back inside again, fails and keeps going down, hitting those levels. Look at how it closes below the levels and sells one more time, closes and sells until they hit this level here, and then structure begins to change to the upside now. Look at that. Look at the delivery there. They keep breaking those levels nicely now to the upside, closing back above him here. Immediately they close above him there, you can see our price is running for those highs again. Why? Because there are buy stops there. And then it goes all the way up. Look at how it nicely opens on this new week here, and then it respects this level here and trades into this equilibrium of the range there, and then eventually collapses nicely. Look at that, respects it, and then gets tumbled down. So you can see how price is being delivered nicely there, and we still have this level here which I can trade. I still go all the way into the future. You can see how price is allowed to trade below these levels, and it's not allowing even like to go back up. You get that reaction. What's that? CD? They will get entry through. You can even use this to make it solve it. Nice deliver, very nice deliver. And we have this equilibrium here. You can still extend it if you want. So look at how price is being affected by this previous equilibriums and the highs and the lows of Mondays. Look at how price is sweeping this high here, this equilibrium price point there. Price keeps sweeping it. What's residing there? We have price stops there. What's residing here? Price stops. What does price do? It engineers those price stops. It sweeps them into this bearish order block. And what do we see? We see a nice sell. Look at how it broke with one candle, this 1, 2, 3 levels. And as it broke that, what did it leave here? A fair value gap. You can see that there's an interest, it's a level of interest here. And this level is going to be revisited again in the future, which might be tomorrow. So we have this level here, price breaks below it, hits it, sells off. Look at it, comes back to it, hits it one more time, takes out this Friday's low here, and this was Monday's price action. Took out the Friday's low, formed this order block, broke structure, came back into it. Look at the equilibrium of this Monday. So we have this Monday high and low. Now we're on a new week now. We have those levels marked, which might be of interest. Observe how price is going to reaching to those levels and into this liquidity. Price is above the equilibrium of the range high and low. So coupled with the fact that we broke above that and we are bullish. So we'll be seeing if price is going to have that desire to run above there. But for now, price is still trading inside Monday's range, so it can still decide to go up into those levels. As we discussed previously on this here, where I said yesterday, I want to see price trade into that favorite gap. It might be qualified to run for that area of interest there. And if it wants, it can still accumulate inside this range here. They can still hold it inside this range if they want. It can just keep going up and down inside this range, just up above this equilibrium and then take it down below the equilibrium, maybe until a high impact news driver takes it out of the zone. But my focus is these equal highs. I'm still having them as my target, and after that this area here. So we'll see how price behaves, but observe if it decides to come down, observe how it trades here, and if they decide to take out this low, observe how they will react after taking it out. But yeah, that's one of the lessons that we can look into, and yeah, hope you took something from this, hope you learned something, and more explanation on really what's happening here will come as we move on together. There are still a lot of things that we are going to do and that we are going to learn. This is just the beginning. Let's stay tuned in, guys. Subscribe to our YouTube channel and let's grow together this community and let's make an impact. Invite your friends, invite your family so that they can come and learn. These skills set when you have it, no one can take it away from you. So make sure that whatever that I'm sharing with you, take it seriously and learn. What I just shared with you here, you'll never see it anywhere apart from me showing it to you. I just learned it by my own study. So just make sure that you dig in and search and make notes, journal your notes, practice and practice and practice. This alone, you can form a trading model out of it. You can form a trading model out of it. You can always form a trading model out of it. So just make sure that you put in the work, and as time goes on, you'll begin to earn from this knowledge. Have a nice trading day today. I love you all, and I want to help you to know how to trade and to understand how to read price action. That's my aim. My most important desire that I want to see in all of you is to see you all having the ability to read price action, because with that skill set, when you work on your psychology, you can be able to conquer these markets. Thank you so much.